Now recording. We have ES up. SP 500 futures. This is actually an H4 chart. I like to look at H4. I like to look at you guys know me. I like to, that's my favorite chart actually. 4 hour, H4, 4 hour chart. We actually got down to 320, 3290, 3,290, 3290, however you want to put it. Right off that blue level. I actually wanted more downside. Max downside, I was hoping for at least 3266. Let's see what happens, if it's going to be a continuation downside or what's going to happen. I'm not too sure what the news is, but listen, we trade price. We don't trade much on news. News comes with price. So price is actually news driven as well too. So we just got to follow the price. We are currently holding SPY puts and SPY calls, each with different dates. People are asking me how would I go about this trade? Pretty simple. I'm going to collect on the put side. Then I'm going to roll that put position, add it to my call position. Why? Simple. Because after I collected on the downside, I'm definitely going to be able to collect on the upside as well. That's the whole thing about hedging. When you hedge, you can collect on both sides. It does not matter. People think, oh, one side has to work and not. Yeah, one side can have to work. Sometimes you can lose on both sides. That's when it's choppy. You can lose. And there's times where you can actually win on both sides, depending on how big the move is. So short term, we got puts, long term, we have calls, like stuff like that. So it works out. But let's get into what I want to get into. I actually like this channel here. I like this channel a lot. It's a clean channel. Pretty good channel. Levels are in place. I can actually just remove this and just give you the levels. Pretty simple. Weekly. Daily's already happening. Daily's already outside the 14 and 30 SMA. So what this tells me, we have more downside. Because you guys know why we have more downside. The downside is going to be the 14 and 30 SMA on the weekly charts. So we got to see what's going to happen there. This might be creating, and if we cannot break 3,334.75 in the next week or two, if we test that and cannot close above it, we're forming a right shoulder. You guys can see it here already in the picture. I probably don't even have to draw it, but I'm actually going to draw it. We have this going for us right now. See, depending on what the downside is, will they bring us down to 226 here, and then bring us up to here, and then come down. Probably get a nice move to here, which you get long again, which should also coincide with, let me see, where's that level at? I was thinking something like more of everything lands up here. It would be something like this, like a megaphone, like a big megaphone. It will break into there. But if this does break down, if we lose 31.87, then we have crazy downside. Next support would be previous breakout somewhere around 31.48. We're going to be watching this a lot. We're actually going to be trading SPY a lot again now. Because if everything's following SPY, if everything's following the market, we trade SPY. When everything has its own direction against the market, that's actually good. But when I start seeing everything following wherever the market goes, you start trading just one thing so you don't overtrade. I understand you can get moves from other stocks and tickers, but I like to focus on SPY in these cases too as well. So going in tomorrow, we have SHAK reports tomorrow morning. Pretty interesting. If SHAK gaps down, let's say SHAK touches 70 tomorrow. Let's just say, hypothetically speaking, it touches 70 tomorrow, gaps down off of this 70 here. I'm going super long. I'm going long and strong, and I'm going to take some 80 Aprils, and I'm going to take some 80 Mays, and I'm going to look at those 120 calls. Actually, if it does come anywhere under 71.29, I'm going to take those 120 calls that expire in January. just because. But this SHAK setup, nothing's changed. It's still intact. Levels are still intact. Nothing has changed here. Everything is perfect. And we have earnings tomorrow, so we have to wait to see what happens with that. How SPY's gonna, how SHAK's gonna react. I want to also watch BYND because those two, when one works, the other one doesn't. Sometimes they're in sync in the day. One could be down, the other one could be up. They're both bipolar with each other, how they move. But again, levels are intact: 71.29, 65.73, and 76.85. Those three levels are what's important. Any close above 76.85 is what we want for the weekly to get even more long. Tomorrow we will find out the real test and see if we break out. I definitely want a gap down on the daily. I want it to touch that 70. That would be freaking epic. I got to check the weekly also. Weekly, actually, I see the only issue here is that we're within the weekly range of the 14 and 30. So two things can happen here. See, that last time we had that 12-point move. So a 12-point range happens. Let's say off of 65.73, that puts us at 77. So if we bounce off of that, we get a range 77. Morning or afternoon, it doesn't matter. They report tomorrow, period. Whether it's morning or afternoon or evening, I don't care. They report tomorrow. It's going to be very telling. If there's a freaking huge gap down tomorrow, that's going to make great for ER. I'm definitely going to go long. Now the issue here, see, I'm seeing a trend. This is the weekly. We're inside the 14 and 30 SMA. The more we stay in this, the more tighter this range becomes. Remember, if it breaks above or breaks below, you know what to do. You go short. If it breaks the 14, you go long. If it breaks the 30, 30 would be on the upside. And actually, I'm trying to clean this up. Perfect. It looks more better that way. Much better that way. I was trying to see if there's a trend, if there's like some pattern or something that I'm not seeing. I'm not seeing really much right now. This doesn't make sense. If it did bounce, what would it bounce at? It would be somewhere around, it's 65.73 to 71.29. So a gap down to anywhere around here, I would definitely even get long 70 calls weeklies. And then I would definitely get long 75 to 85, 2 months out. No hesitation. I would not even hesitate to do that. This is a nice cup and handle pattern as well on the weekly. Maybe one more test of 71.29. If we can do that, that would be awesome. That's SHAK. We have GILD also. GILD plays a part in regards to this whole virus thing. GILD is basically just about ready. It's just been struggling. It's been a lot of selling and buying, a lot of selling and buying, a lot of shorting, and a lot of shorts getting slaughtered. And I think they're just building it up. I think there's going to be some more news. They have other things coming out this year. Some more data coming out this year. I know that. The close above 66.82 was very bullish. That's 2 weeks in a row. Bounced off of the 14 SMA 3 times. That's 3 weeks in a row. And this is what I'm seeing, because I'm actually going to break this down a little bit. This is what I'm seeing, right? So now I'm going to go into daily on this one now. Perfect. That Friday move was impressive. Look at that. That's beautiful. That was a big move Friday. And look where it stopped at here. The reason I drew these lines was because when you're looking at the weekly chart, check it out. Let me zoom in. I'm doing from open to close. I'm not using the wicks in this one. So open to close. Candles closed here, low here, low here, low here, high here. I mean, not high, but here, here, full candle, here. And this is where we stopped at. Now, this is going to be interesting how this is going to play out. So what they need to do is keep us above, what is that, 68.94? 68.91. They can keep us above 68.91 this week. It's very important. I'm not getting any good readings with my fibs. That's another thing that actually does bother me. Oh, actually, this actually works out. Sorry. This actually can play out. You got double bars. 69.20. We need to stay above that, targeting 70.60. Long-term target for this one, I'm definitely like in the 80 to 90 calls. I mean, it's already overdue. This is overdue for a big move. It's just when. And look at this. It closed literally at that resistance it rejected in, what was this? June. This is June. It rejected, came all the way down, bounced up to 66.82, came back down to 62.50. From there, came up to 69.70, came back down to 65.82, closed above 69.20. Very important level to close above. I'll bring these fibs all the way back just so you can see. Very important levels. This is a double bar, as you guys know. This is very important. Now, 76.49 calls for June, not out the question. We just need them to develop a channel. I don't see any channel. Right now, we're actually breaking out of a flag, a long-term flag. I want to do this. I want to remove this because this is just too much going on here. So boom, it would be like this would be my channel. So this would be it. Anything above 70, long. Anything below 64 is a short. This is just basically simple. It's bottoming here. This is a all year was in what? 5-point range all year? Jesus Christ. What is this? 69, almost 70, 61. 7-point, let's say 7-point range. Now we're breaking out of that range. We can get somewhat, let's say we get a move like this. Oops, there we go. See, this move took some time to happen after it bottom, but if this was valid, it would be somewhat max this year for GILD would be around 84-ish, 83. Pretty clean. This for when you're playing GILD, the best thing you can do is actually buy time because you guys see what happens. After that first big move, you have to allow 3 weeks for the next move to happen. So see what happened? What was it? 127 that week, big move. Then it went inside and then it went outside. Second week. Third week is the next following move. You guys got to keep that in mind. You guys got to watch stuff like that. That's stuff you got to pay attention to. And like I told you, this one's going to be a great trade. You buy time with this one. It's been, I can't believe it, all year from 2018 to 2019. It's been in this channel. Now it's finally breaking out of this channel. I would use 2018 resistance around, I'll use around 77 as a target. So like July 77s, I don't know how expensive those are. Let me check them out now. That's April, May, June. There's no July, so we can go August. They're probably pricey. They're not that bad. 77.50s are not that bad. Let's look at the Junes. 75s are $3. The 77.50s are actually around $230, $220. 80s are not that bad. I'd rather buy more time with this one, even if there's an ER. ER ranges are not that big until they break out. We'll start seeing some real serious ranges when we get above 70. That's when GILD starts to move. All these ranges here, I'm gonna say 2019 to 2020 was an accumulation range. I mean, let's add a volume to that. I want to see how it looks. Just want to get an idea. Or let's just say, Jesus Christ, the biggest volume was that week of 2-3. Jesus. Big volume ranges like that, it does move big. The last big one was here, but this one was is that, how many points is that? Jeez, that was a 9-point range. This one was 7-point range with big volume. Now we need to see a continuation. We're basically hovering above the 14 and 30 SMA too as well. So this is something you got to keep your eye on. We're already going on this is going to be the 4th week of the trading month. So as you guys know, and I told you guys this, we always do good the first 2 weeks of the month. I don't know why. We do so well. We slay it. By the second week, Wednesday, we should have been done. And if we wanted to play, we could have played whatever we want, wired out whatever we wanted. Even if we lost, it was okay because we already wired it out. So going forward, we have rules in play. And I want to talk about that. We have these rules in play where if it's a short week, we got to be mindful. You never buy the short week. You never buy that short week. You never buy any expiration that short week. You buy a week out or actually 2 weeks out. Give yourself more time. And if the trade does go against you, you have to hedge. So if you're buying 2 weeks out, it's okay to hedge. If you have a $500 account and you're buying 2 weeks out and you're buying 30-cent contracts, right? And you're only buying 5 contracts, you can buy 2 contract puts in the money weekly. Very safe. It keeps it's a safe strategy. And a lot of you don't get that. You guys, like I tell you guys, it's a short week, don't trade. You guys still trade and then you guys get upset. I wasn't upset. I mean, I had personal problems and it messed up my trading, but I'm not upset because I know I'm going to bounce back from it. As you guys all know, you're all going to bounce from it. But everybody, it's like you can't give up. You just got to go all cash and get out the trade. If you're down 20%, let 20% be your max loss. Let 10% be your max loss. Some people have 5% as their max loss. So I want you guys to be focused this week. A lot of earnings this week. You guys do get caught up in earnings. I understand, I don't want to miss earnings. But every earnings trade is a gamble. So treat it as a gamble. Play very, very small. But please don't tell me about it because I don't really care much about any earnings that I really don't follow. A lot of things are actually not trading the way they were trading last month or 2 weeks ago. So that's another thing you got to pay attention to. Look at things that are holding up. Look at Azo. We were freaking trying to trade Azo the long way. And what happened? We ate crap. And then when we didn't pay attention to it, what happened? It started beasting. Started getting 20-point days. It was getting 20-point up days. And it was just killing it. BKNG, another one. We were longing it, and then I forgot what happened, and then it was taking a hit with the whole cruise and stuff like that, booking stuff, and then it started beasting. It did 50-point moves, 70-point moves, So it's like we need to stay in the game. We need to stay focused. You guys don't need to trade every week. You don't even need to trade every day. Some people even wait till Tuesday to trade. They watch Monday and wait till Tuesday to trade. When you see me jump into a play, you don't have to get into that play right away. That's your biggest mistake. And sometimes I shake my head because I'll get into play and the volume will be 3 contracts. And from 3 contracts, it already goes to 300. I bought 3 contracts. That should tell you a lot. If I buy 100 contracts, that doesn't tell you anything. 100 contracts doesn't mean I'm confident in the play. 100 just means I bought enough contracts that all I want is a 20 to 50% move on that strike premiums, and I'm out. So when I say SPTP, I'm out. It shouldn't matter what price I got out of. It shouldn't matter how many contracts I have. That's irrelevant. If I'm telling you SPTP and we're at the high of the day, who's to blame? When I say SPTP everything, even if it's red and you're only down 10 to 20%, get out. Get out. Because I'm holding, I can hold because I'm okay with losing. I already removed that emotional part. A lot of you guys and girl and women are not there yet. When you get past the emotion, a lot of you are actually there past the emotional part where it's like it really doesn't bother you. You're like, okay, I'm down this much this week. I took a hit last week. You know what? I'm going to trade smaller next week. So if you took a 50% loss in a week, you're going to try to use your whole account and go back in it, and you're just going to revenge trade. So what you want to do is you want to trade even smaller than you usually trade. Okay, I'm used to trading $200. Whatever position Ninja trades, I'm going to max capital I'm using is 200 on that position. Any position he alerts, I'm going to go in with $200. Let's say you took a loss that week, going in with $200. Next week, you're like, you know what? I'm going to do max $100. You could, this position that you can buy with $100. You can buy 5 contracts for most of them, and they go up. I get DMs daily from team members that are like, thanks, Ninja. That was a quick 40%. That was a quick 20%. Some things go to 200%, and they're like, I'm out. I'm waiting for a re-entry. I'm back in. Some of you can't do that, so I tell you to buy time. Because if you buy time, you don't really have to worry much. Some people, you guys get aggressive. Okay, you rolled up. If you're going to roll up and roll out 2 weeks as opposed to rolling out 1 week. Or you don't even have to roll up. Only roll up when you feel there's going to be a continuation. If a stock moves has a big range in that first week, you know the next week's going to be an inside range. It's usually how it is, depending on if that stock already bottomed. It has like a yearly, it's like a 52 low or something like that, or it's finally breaking out of a bottom range. Then it's going to have a crazy continuation. For example, SHAK was one of them. BYND was another one of them. And then look what happened. It hit, it moved crazy strong to 130, came right back down to like 110, 109, 107, and then right back where it's at, like 118, 120 range. It's there now. You can abuse it until it stops working. And that means keep playing that side you're trading, whether it's long or short, until it goes against you. When it goes against you, that means it's time to flip sides. If you're not comfortable with going long, then go short. If you're not comfortable going short, go long. You know, you got to inverse your charts. Inverse your charts if that helps you. If you're used to going long, inverse your chart. Look, if I'm used to going short, I'm gonna inverse it, right? So minus GILD, let's do GILD. If I'm a short trader, right, and I'm playing this, it's inverted so I can go short because I know my levels. Breakout would be the opposite way. Right? Well, it actually looks much better inverted because the actual levels line up. So, right? So you want this to break down below 71.14, and that's basically, it will break out and go longer. But here, if I'm playing this short, I'm going to look at short, I'm going to look at puts, and I'm going to look at, all right, you know what? Resistance is 66.81. Support is 71.14, right? So I'm going to buy 67 puts. It breaks 66.81, closes above that, is going to 63.31. Guys, you don't have to keep adding 30 million technicals to finally find to be comfortable to go short. You don't have to do that. Invert your chart. It helps. Your fibs work the same way inverted as they do normal. And that's what I want you guys to understand. Simplify everything. Max positions, no more than 3 positions in your account. Until your account is at triple from wherever you started. Let's say you started with 500 this week, and in 3 weeks you're at 2K. By that time, still stay. Actually, if your account is not over 25K, you cannot play more than 3 position. No, 2 positions. That's a rule. If you're trading with a $500 account, you should only be playing 1 to 2 positions, cores, no lottos. 500% accounts should not have lottos at all. Should not even look at lottos. That's what you guys need to start focusing on. Everybody, like I don't even have to know your size in a position. I already know when somebody's heavy. When a person asks you the same question 20 times, it just, should I add here or should I hold? You're in too deep. And you guys gotta stop doing that. You gotta stop doing that to yourself. Oh, I'm hoping this is gonna turn around. I hope tomorrow's a better time. I hope tomorrow works. You know, it never works like that. It never does. So you guys, like, gotta stop that. You gotta stop. You gotta stop. You definitely have to stop. Oh, wait, let me stop the recording because I want you guys to ask me